Hi everyone, hope you are doing well. In today's tutorial, I'll be teaching about external activities of non-profit organizations. As you know, non-profit organizations do not operate with the intention of making profits. But still, they need to have enough funds with them to carry out their day-to-day activities. In that case, in order to earn an income, they might carry out some external activities with the intention of making profits. And those profits would be used to fund their day-to-day activities. For an example, let's say the Common Society of our school is conducting a cafeteria, or let's say conducting an ice cream stall with the intention of making profits. And those profits are used to fund their day-to-day activities. Now, in that case, the income and the expenses relevant for that external activity cannot be straightaway recorded in the income statement of the association. But a separate profit or loss account has to be prepared to find out whether they have made a profit or a loss through those activities. And then at the end of the accounting period, the profits and the losses made from those external activities are taken to the income statement of the association. If it is a profit, it is added under income, but if it is a loss, it is deducted under expenses in your income statement. Now, if you need a note on this, you can just refer to page number 74 in your textbook. And I will explain this further using question number 44 in page 75. So, before you continue to watch this video, you have to be prepared with your textbook, your question practice book and stationeries. Okay, let's read question number 44. In question number 44, they say, the treasurer of Naval Sports Club has presented the following receipt and payment account for the year ended 31st December 2018. Now here you are given the format of the, you are given the receipt and payment account for the year ended December 2018. Then you are given some additional information. Under first additional information, you are provided with opening balances and closing balances of assets and liabilities. And also, you are given a second additional information, and there it says 50% of salaries and wages and 25% electricity should be allocated for the restaurant, which means from the total amount of salaries and wages relevant for this accounting period, 50% is relevant for your restaurant and the remaining 50% is relevant for your association or the club, general expenses of the club. And then 25% of the total electricity expense relevant for this year 2018 should be allocated to the restaurant, and the remaining 75% is considered as a general expense of your club. Now, you are asked to prepare restaurant trading account. Actually, it should be the restaurant trading and profit and loss account for the year ended 31st December 2018. Write it down in your book. And then income statement for the year ended 31st December 2018 and statement of financial position as at 31st of December 2018. Now, before we move on to the answer, there's a small correction to be done. In your receipt and payment account, in your debit side, you are given restaurant receipts 86,900. Cut it and write receipts from restaurant debtors. Receipts from restaurant debtors. Okay. Then, as you know, before you answer this question, you have to draw your formats. Here I have drawn the profit or loss statement of the restaurant, and then the income statement. Actually, I have put the figures here in order to save the time. And then the Naval sports car. Now, you know, when you draw these formats, you have to draw them with relevant topics. Let's start with the first additional information provided. Sports ground or the pavilion. The opening balance and the closing balance is given. Now, this opening balance and the closing balances are the net book values, not the cost, or we call it the carrying value. I hope you remember the difference between the cost and the net book value or the carrying value. Okay. The opening value is 380,000 and the closing value is 370,000. Now, before you calculate depreciation using this information, you have to go through your receipt and payment account and check whether there is any disposal or purchase of pavilion within the accounting period. Now, as you can see, there is no any disposal or purchase of pavilion. Actually, when it's come for pavilion, it's not purchase. It might be renovation, etc. And we will discuss them in detail later. Then, the difference between the opening balance and the closing balance of the sports ground and pavilion is going to be the depreciation on pavilion. Then 380,000 minus 370,000 gives you 10,000. And that is recorded in your income statement under expenses. Depreciation of the pavilion 10,000. Then at the same time, the closing carrying value or the net book value of the pavilion and the sports ground has to be recorded in your statement of financial position. Here I have recorded this under non-current assets. The balance is 370,000. Let's move on to the second one. Sports equipment. Opening and the closing balances are given, and then we have to go through the receipt and payment account to check whether there is any disposal or purchase. As you can see, there is no any disposal. There's no any disposal of non-current assets within the accounting period. But they have purchased 84,200 worth of sports equipment within the year. Then you all have to do a small working to find out the depreciation relevant for sports equipment. Now this is the same equation I have taught you all before. You have to start with the opening carrying value. For that you have to add the purchases. From that you have to deduct the carrying value of the disposed asset and the depreciation to calculate the closing carrying value. Now in this question, you are given the opening carrying value. You know the value of the purchases you made and there is no any disposal. Then you know the closing value and what you have to calculate is depreciation. Now once you get the total of these two and deduct the closing carrying value from that, you get the depreciation. And the items to be recorded in the income statement or the profit or loss statement is highlighted in yellow, and the items to be recorded in the statement of financial position is highlighted in let's say green. Okay, now this has to be taken to the income statement, therefore I have highlighted this in yellow. In your income statement, under expenses, you record depreciation on sports equipment 23,400. Then at the same time, the closing value of this sports equipment has to be recorded in the statement of financial position. Here I have recorded that. And then we can move on to the next additional information provided. Furniture, the closing balance and the opening balance of furniture is given. Now when you go through your receipt and payment account, you can see that they have purchased 84,000 worth of furniture within the accounting year. Then once again you have to do a small working to find out the depreciation. We use the same formula, and here I have recorded the opening value. Then purchases, I have got the total, and you know the closing value. Once you deduct the closing value from the total of opening carrying value and the purchases, in the absence of disposal, it gives you the depreciation. Now this has to be recorded in your income statement, and the closing balance has to be recorded in your statement of financial position. Now here I have recorded the closing value 194,500, and then 12,700 has been recorded in the income statement, furniture depreciation. Then stock of restaurant, the opening stock and the closing stock of the restaurant here. Now, though we prepare a separate profit or loss statement to calculate the profit or the loss made through the external activity, we are not going to prepare a separate statement of financial position for our external activity, which means all the assets and liabilities relevant for our external activity is also recorded in the same statement of financial position. Now, first of all, the closing stock of 22,100 has to be recorded in the statement of financial position under current assets. Once you record that, once again, this closing stock has to be recorded in the profit or loss statement of the restaurant, and then the opening stock of 23,600 should also be recorded in the profit or loss statement of the restaurant. After that, you are given the balances of restaurant debtors and restaurant creditors. Now, what is the purpose of giving these balances? You know, the closing balance of debtors and the closing balance of creditors are given to be recorded in the statement of financial position. But what's the reason of giving these opening balances? Now, if you go through this question carefully, you will see that you are not provided with the sales and the purchases of the restaurant within the year 2018. If they have made any cash purchases, it would be recorded in the credit side of your receipt and payment account. And if they have made any cash sales, it would be recorded in the debit side of your receipt and payment account. But as you can see, you cannot see any sales or purchases relevant for your restaurant. In that case, you have to assume that they have made all the sales and purchases on credit basis. And the value of credit sales and credit purchases can be calculated using debtors balances. Now actually there are two ways of calculating this. As you know, using debtors balances, you can calculate credit sales, and using creditors balances, you can calculate credit purchases. Now to calculate this, you can either use a formula or you can use the control accounts, debtors control account and the creditors control account. Now here I have used the formula to calculate credit sales and credit purchases relevant for the accounting period. let's look at working number 3. Now this is the formula I have built. Usually to calculate the closing balance, you have to add the opening balance and then the credit sales plus VAT. If VAT is not given in your question, you can just ignore that. Then from this balance, you have to deduct sales return, discounts allowed, cash received from debtors, and bad debts to calculate the closing balance. Now in this question, you are given the closing balance, but the missing figure is the credit sale. So what we can do is, first we can record the opening balance 15,600. Then you can leave this here. Then sales return is not given. Discount allowed is not given. Cash received is given. It is given in the debit side of the receipt and payment account, which is 86,900. I have recorded this, and bad debt is not given. And then the closing balance is 18,900. Usually what we do is the total of all the addition is taken here and total of all the deductions is taken here. Now here, okay, I'll just do this for you all there. Let's delete this. Okay, that's all you know. Then to calculate this balance, you have to do is add this 86,900 to 18,900 equal, it gives you this. Then you can easily calculate the figure here. You have to add this one and deduct this one, and it gives you 90,200. And this is considered as the total sales of the restaurant during the year 2018. But if they have given you cash sales, the value of cash sales has to be added to this one to calculate the total sales relevant for the accounting period. Now in this case, this is taken to the profit or loss statement. Here I have recorded here, and then the closing balance of debtors, which is 18,900, is recorded in the statement of financial position under current assets. And then let's move on to the next working, creditors. Once again, I'll do this to you all. Okay, the opening balance is given. You don't know the value of credit purchases, that's what you have to calculate. And then purchases return is not given, discount received is not given. Cash paid is given, which is 41,200. I have taken this from the receipt and payment account. In the credit sign, there's a balance called restaurant creditors, 41,200. This is the total amount you paid in cash for creditors. So it is recorded here. And then to calculate the balance here, you have to add these two. Then you can calculate the balance here. To do that, you have to deduct 12,200 from 48,000. It gives you 35,800. This is the value of purchases relevant for your restaurant, and this has to be recorded in your profit or loss statement. And the closing balance of creditors is recorded in your statement of financial position. Here under current liabilities, I have recorded closing balance of creditors 6,800. And then in the profit or loss statement, I have recorded purchases 35,800. Okay, let's move on to the next information provided. Here you are provided with subscription in arrears and subscription in advance. This is super easy because we've been practicing this for some while, and all you have to do is prepare the subscription account, and here I have done that. Opening subscription in arrears is recorded in the debit side, and then let's remove them. It's easy for you all there. Okay, opening subscription in arrears 22,800 is recorded in the debit side of the subscription account, and then the closing subscription in arrears is recorded in the credit side of the subscription account, and then subscription in advance, opening subscription in advance is recorded here, and closing subscription in advance is recorded here, and then the total amount of subscription received in cash within the year 2018 is 184,800. You can find it from the receipt and payment account, and I have recorded it here. Once you record all this information, you can calculate the total of the credit side. It gives you 255,600. You have to record the same amount here, and then from this you have to deduct the total of these two to find the amount to be recorded in the income statement. So plus this one minus 200,000. This is the total amount of subscription income relevant for the accounting period, and this has to be recorded in your income statement. Here I color it with yellow, and then as you know, closing in advance and closing in arrears have to be recorded in your statement of financial position. Closing in advance is considered as a liability and it has to be recorded under current liabilities, and closing in arrears is considered as an asset and it has to be recorded under current assets in your statement of financial position. Here I have recorded subscription in arrears 49,600 and subscription received in advance 32,800, and the total subscription income of 200,000 has been recorded under income in the income statement. Then you can move on to the next information provided. Here you are said there's a fixed deposit of 40,000 at an annual interest rate of 12%. As you can see, there's no any difference between the opening fixed deposit and the closing fixed deposits, which means within the time period or within the year 2018, they haven't made any new fixed deposit, and also they haven't withdrawn any amount from the fixed deposit they had at the beginning of the accounting year. In that case, to calculate the total amount of fixed deposit interest relevant for the year, all you have to do is the value of the fixed deposit has to be multiplied by the given percentage. And I have done this as the 9th Perkin. Here the percentage is 12%, the value of the fixed deposit is 40,000 and the annual fixed deposit interest income is 4,800. Then you have to go through your receipt and payment account and check how much you have actually received as fixed deposit interest. As you can see, at the end of the year 2018, you have received only 3,400. Then, once you deduct the amount received in cash from the total amount of income relevant for the accounting period, you get the amount of fixed deposit income receivable. Income receivable is considered as an asset of the organization and it is recorded in the statement of financial position under current assets. and the total amount of income relevant for the accounting period is taken to the income statement. Here I have recorded fixed deposit, interest receivable 1400 under current assets, and then in the income statement I have recorded 4800 as fixed deposit interest. You should remember that we record the total amount of income relevant for the accounting period in the income statement. Only the received in advance amounts and receivable amounts are taken to the statement of financial position. At the same time, you all should record the value of the fixed deposit, which is 40,000 in the statement of financial position under non-current assets. Now, as you know, we cannot add this fixed deposit or the investment straight away to other non-current assets. You all have to get the total of other non-current assets first, and thereafter you can record your fixed deposit or the investment. Here I have recorded 40,000. Then you are given accrued electricity and prepaid telephone charges. Let's look at electricity. Now you know the formula to be used to calculate the amount of expenses relevant for the accounting period. You have to start with the amount paid in cash. For that you have to add opening prepaid and closing accrued. Then from that total you have to deduct opening accrued amount and the closing prepaid amount. Now in this question you are given the amount paid in cash. It is there in the receipt and payment account. Electricity 16,400 paid. You have to record it here, and the closing accrued amount is 800 is given, and opening accrued electricity 1,200 is given. And to calculate, then you can calculate the total expenses relevant for the accounting period. AP stands for accounting period. 16,400 plus 800, 17,200. Once you deduct 1,200 from 17,200, you get 16,000. And this is the total amount of electricity expense relevant for the accounting period. Now, according to the information provided in the second additional information, 25% of the total electricity expense should be allocated to restaurant. Then in the profit or loss statement as electricity expense we record 4,000. And then in the income statement we record 12,000. 75% of 16,000, which is 12,000. Thereafter, closing accrued amount of 800 has to be recorded in the statement of financial position, and this has to be recorded under current liabilities. Here I have recorded accrued electricity. This has to be accrued electricity 800, and also I have recorded 75% of the electricity expense in the income statement. Electricity 12,000 and 25%, which is 4,000, has been recorded in the profit or loss statement of the restaurant. This has to be electricity, okay. And then you all can move on to prepaid telephone charges. If you want, you can just straight away go and record the closing prepaid telephone charges in the statement of financial position before doing the adjustment. Otherwise, what I prefer is to do the adjustment first, or to do the working first, and from the working itself you can find out the amounts to be taken to the profit or loss statement and the statement of financial position. In that case, you will not miss any amount. Telephone charges, I use that same formula to calculate the total expense relevant for the accounting period. Amount paid is 10,300. It is given in the receipt and payment account. For this you have to add opening, prepaid and closing accrued. Closing accrued is not given, so you just have to add opening, prepaid, and the total is 10,800. From this you have to deduct opening accrued and closing prepaid. Opening accrued is not given, so you have to deduct only closing prepaid, and it has given you 10,500, and this is considered as the total telephone charges relevant for the year 2018. So this has to be recorded in the income statement. Now here we are not going to allocate any portion to our restaurant because it is not mentioned in the question. Now in your question, if it is not specifically mentioned that a portion of this particular expense has to be taken to the external activity, you have to assume the total amount of that expense relevant for the association. There's no any portion which is relevant for the external activity. Thereafter, the closing prepaid amount of 300 has to be recorded in your statement of financial position, and this is considered as an asset, and it has to be recorded in the statement of financial position under current assets. Here I have recorded prepaid telephone charges 300, and the total amount of telephone charges has been recorded in the income statement, 10,500. Then at last there's another adjustment to be made. 50% of salaries and wages should be allocated to the restaurant. Now, since there is no any accrued or prepaid amounts relevant for salaries and wages, you have to assume the total amount of salaries and wages is equivalent to the total amount of salaries and wages paid in cash within the account in here. Now, when you go through your receipt and payment account, you all can see you have paid 15,800 as salaries and wages. From these 15,800, 50% is relevant for your restaurant, and the remaining 50% is relevant for your general expenses. Then we can do a small working to calculate the percentages. Now here, total amount of salaries and wages relevant for the accounting period is 15,800. 50% of this is 7,900, and 50% once again it is 7,900, and this has to be recorded in the profit or loss statement of the restaurant, and this has to be recorded in the income statement. Here I have recorded salaries and wages 7,900. Then in the profit or loss statement of the restaurant, once again I have recorded 7,900 as salaries and wages. Now, when you prepare profit or loss statement of restaurant, it is not necessary to classify your expenses as administration, distribution, etc. Since there are only two, or anyway you won't be given much expenses, in that case you do not have to classify them. You do not have to group them. You can just put the heading expenses and write down all your expenses under that. Okay, I hope we have done all the adjustments, and then you can start to record remaining balances. You can start from the debit side of the receipt and payment account. First you have the opening balance of receipts. First you have the opening balance of receipt and payment account, 8,400. This is considered as the opening cash balance of the organization, and you have to consider this balance when you are calculating opening accumulated fund. And then subscription, you have already taken, you have already ticked it. Admission fees 28,300 has to be taken to your income statement. Here I have taken it. And then ordinary deposit interest 18,700. Now ordinary deposits are types of deposits maintained by non-profit organizations, and they are very similar to savings account, but they are maintained by non-profit organizations, and through those deposits you all have earned an interest of 18,700, and that has to be recorded as an income of the accounting period in the income statement. And thereafter fixed deposit interest we have already taken. Restaurant receipts, I just wanted you all to change this, we have already taken that. Let's move on to the credit side. Sports equipment we have taken. Sports ground maintenance, this is considered as an expense. Repair and maintenance of non-current assets are considered as expenses. Therefore, it has to be recorded in your income statement under expenses. And then restaurant creditors we have taken. Electricity we have taken. Telephone charges and salaries and wages we have taken. Stationery 6,200 we have to take into our income statement. Here stationery 6,200 I have recorded. And then sports competition, now this has to be considered as an expense of sports competition just because it is recorded in the credit side. It's a payment and it has been recorded in the income statement under expenses 6,200. And then sundry expenses 84,000 also has been recorded in the income statement under expenses. The last one, furniture, we have already taken that into our accounts. Then you are given the closing balance of receipt and payment account. Now this represents the closing cash balance of Naval Sports Club, and this has to be considered when you are calculating accumulated fund at the end of the accounting period. Now once you all record this, you have to calculate the profit or the loss made through the restaurant. Now as you can see, you all have made a profit of 41,200, and this has to be taken to the income statement. Here I have recorded under income. If the external activity has made a loss, that has to be recorded under expenses. If it is a profit, it has to be recorded under income. Now once you record that, you have to calculate the surplus or the deficit made within the year 2018. First you have to get the total of income, and then you have to get the total of expenses. Then the total of expenses has to be deducted from the total of income, and it has given you 150,100, and it's a surplus. If you get a minus figure here, which means you have made a deficit. Now once you calculate the surplus has to be taken to your statement of financial position. As you know, it has to be recorded under accumulated fund, 150,100. Now though I have recorded it here, this figure is not given in your question. Now you all have to find it out. Usually, when we record our accumulated fund in the statement of financial position, we have to record the opening accumulated fund. because otherwise when we add our surplus to the closing accumulated fund, that is going to be overstated because your closing accumulated fund includes the surplus of the current accounting period. So you have to make sure you record the opening accumulated fund. Now, how can you calculate opening accumulated fund? All you have to do is get the difference between the opening total assets and opening total liabilities. In that case, you should never ever forget to take this balance into consideration. This is a big mistake, or this is a very common mistake among students. They take all the assets and liabilities mentioned here, but they just forget to get the balance of receipt and payment account. So when you calculate opening accumulated fund, you have to add the opening balance of receipt and payment account into the assets, into the total of assets. Once you do that, you get 725,800. Once you add the surplus to that, you get 875,900. Then you can start to calculate the totals of non-current assets and current assets. First you have to calculate the total of other non-current assets except fixed deposit, and that is 771,600. Then for that you have to add the fixed deposit, then it gives you a total of 811,600. Then you have to get the total of your current assets, which is 104,700, and the total of assets is going to be 916,200. Now I am not going to explain these things in detail because we did all these things in a previous lesson. That's why I am just trying to explain these things quickly, and even most of these adjustments we learned them in a previous lesson. So that's why I am not explaining them in detail here. And then you have to get the total of your accumulated fund and liabilities. Now here I haven't put the heading non-current liabilities because you are not given any non-current liabilities in this question. In that case, you can just eliminate that heading. So all you have to do is get the total of current liabilities and then add it to the accumulated fund. Closing accumulated fund. This is your closing accumulated fund. Opening accumulated fund plus surplus gives you closing accumulated fund. Then it gives you 916,300. Here also you got the same balance, 916,300. Let's put them in the same color. Okay, I hope you all understood this, and if you all still have any doubts, you can just contact me at any time during 8 a.m. to 8 p.m. Yeah, that's all. Stay safe.